How do you best assess today's market? With the fluctuating dynamics, timing the market can seem like chasing a mirage. It's tempting, but as history shows, attempting to predict its every move, especially based on sporadic global events, can be akin to taking a wild gamble. One of the most crucial things investors often overlook is the deceptive comfort of cash. Holding onto cash might seem secure because of its non-volatility. Yet, the invisible tax of inflation eats away at its value, consistently eroding purchasing power. There's a silent warning here. Don't mistake stability for security. The secret sauce? Portfolio balance. If you've ever noticed, when equities dip due to wavering growth expectations, bonds often rise. It's like a financial seesaw. Wealth, in most scenarios, isn't wiped off. It merely shifts hands. Understanding this balance is paramount. At Financial Literacy, we believe in the concept of an all-weather portfolio. It's about spreading risk while retaining potential for returns. Remember, if you're finding value in this content, hit that subscribe button. We appreciate every member of our growing community. Getting back to the basics, be it an individual, corporation, or government, living beyond one's means is a recipe for disaster. When a currency, like the dollar, becomes the reserve currency, it wields enormous power. But history narrates tales of currencies that have crumbled, devalued, even been obliterated. Bonds, which are promises of currency repayment, come into focus here. As countries like China gain momentum in global trade and IPOs, we must acknowledge the changing dynamics. These changes bring us to the undeniable shift in the storehold of wealth. As liquidity flooded the market, assets like gold and other alternatives emerged as viable storeholds. Comparing this to historical events, like the Roosevelt era in 1933, we see patterns and lessons. This is a transformative period. The world is at the cusp of a new financial epoch. One cannot mention this without addressing China. Having witnessed its meteoric rise since the 80s, I've come to realize that approaching it with preconceived notions or biases can be detrimental. China's journey, characterized by unparalleled growth, is a testament to its strategies and resilience. Now, globally, there's a subtle shift towards achieving a broader prosperity. This doesn't imply a communist takeover, but signifies the importance of inclusive growth. The world needs it, and for it to be sustainable, it must be anchored in productivity. Capital flows are also telling a story. As China increasingly becomes an attractive investment destination and their financial markets mature, there's a subtle change in the world's financial gravity. Historical patterns reveal that emerging empires pave the way for robust financial systems. The Dutch had Amsterdam, the British had London, and the Americans had New York. Is the next financial hub emerging in the East? Only time will tell. But with these shifts come challenges. When states or countries cannot print money at will, they are faced with tough choices, either increase taxes or cut spending. And in many cases, these have led to internal conflicts, sometimes even civil wars. Beyond the basics, we must also recognize the role of technology in modern finance. Fintech, or financial technology, has revolutionized how we think about banking, investing, and transactions. It's now possible to trade stocks, manage portfolios, and access financial insights using smartphones and apps. This democratization of finance means that more people, even those without traditional banking facilities, can participate in the global economy. Alongside fintech, we're witnessing the rise of cryptocurrencies and blockchain. Cryptocurrencies, despite their volatility, are increasingly being viewed as an alternative store of value. Blockchain, the underlying technology, promises transparent, immutable, and decentralized systems. This means that the future of finance might not just lie in traditional banking systems, but also in decentralized platforms that empower individuals. However, it's essential to approach these innovations with caution. With every new technology comes potential risks. Cybersecurity breaches, lack of regulation, and market manipulation are some challenges associated with the digital financial world. So, while it's exciting to see these developments, it's equally crucial to be well-informed and prepared. At Financial Literacy, we also emphasize the role of behavioral finance. This field studies how psychological factors impact economic decisions. It's not just about numbers. Emotions, biases, and herd mentality can significantly influence market movements. By understanding these psychological triggers, investors can make more rational and informed decisions. Environmental, social, and governance. ESG investing is another trend gaining traction. More investors are now considering the ethical and environmental implications of their investments. Companies with strong ESG principles tend to have better long-term prospects, not just because they are doing the right thing, but because they are also aligning themselves with global shifts towards sustainability. In the realm of international politics, trade wars and geopolitical tensions also play a role in the financial landscape. While we've touched upon the rise of China, it's also essential to acknowledge the intricate dance of power between nations. As trade routes shift and alliances are forged, the economic implications can be far-reaching. One cannot discuss the present without mentioning the potential impact of climate change on the global economy. The increasing frequency of extreme weather events, the challenges of transitioning to a green economy, and the socio-political implications of climate migration are all factors that will inevitably influence financial markets. Another thing to watch is the evolving nature of work. Automation, AI, and the gig economy are reshaping how we think about employment and income. As job landscapes transform, so do consumption patterns, savings, and investments. Lastly, education remains paramount. As the world grows more interconnected and complex, understanding the nuances of finance becomes even more critical. At Financial Literacy, we are committed to ensuring that our community is equipped with the knowledge and tools to navigate these complexities. Amidst the sea of financial evolution, there's another crucial element that deserves our attention: the changing demographic landscape. As the global population ages, especially in developed nations, there's a direct impact on retirement funds, healthcare costs, and consumption patterns. The silver economy, focusing on the aging population, presents both challenges and opportunities for investors. Then there's the rise of the Millennial and Gen Z cohorts. These digital natives are not only tech-savvy, but also display different values and priorities compared to their predecessors. Sustainability, social justice, and experiences over material possessions are just a few things that drive their financial decisions. Their influence cannot be understated as they're set to inherit significant wealth, reshaping the financial world with their unique perspectives. We must also consider the influence of globalization. Despite certain populist movements pushing for more insular economic policies, the interconnectivity of today's world cannot be reversed. Multinational corporations, global supply chains, and inter-country trade agreements ensure that financial decisions in one part of the world ripple across the globe. This interconnectedness, while fostering growth and opportunities, also amplifies risks. A hiccup in one region can lead to aftershocks in another. At Financial Literacy, we encourage a holistic approach. It's not just about stocks, bonds, or real estate. It's about understanding the broader tapestry of socio-economic changes and deciphering how they intertwine with the world of finance. By grasping these broader trends and recognizing the subtleties, you're better positioned to anticipate shifts and make informed decisions. In essence, the financial realm is a reflection of our evolving world, and to thrive in it requires a blend of knowledge, adaptability, and foresight. And as we continue to navigate these uncharted waters, one thing remains clear: the importance of financial literacy has never been greater. As we conclude today's insights, remember to like this video and subscribe for more. Dive deeper into the world of finance with Financial Literacy. Stay informed, stay ahead.